Let me go across. We're joined by Madangopal Ramu, he's Senior Fund Manager, Equity at Sundaram AMC, joining us this morning. Great having you here, Madan. Let me start off by trying to get a sense, how are you looking at markets at this point? What are you finding attractive?
We feel downside risk for the market is fairly low, given the economic momentum is pretty strong, and we feel Q1, Q2 there could be some disturbance on the margins for the manufacturing and capital goods side. But broadly, I feel from the second half of this year, the earnings should support the market, and we feel manufacturing, NBFCs, and tech companies. Tech companies, when I say tech platforms, all these sectors look interesting.
Okay. Manufacturing and tech. So IT, would you go out and bet on IT in a bigger fashion, Madan?
Sorry, I could not hear you. Can you repeat it?
IT, within tech, would it be the large cap IT names?
No, we are negative on the large cap IT names because we feel that the AI investment is in the mid cycle, and actually we will still long way before we hit an equilibrium between tech AI agentic involvement and manpower. Where we hit this equilibrium will take at least 2 years, in our opinion. So we feel that until that point, substantial improvement in the earnings for IT sector looks pretty difficult. What we rather invest is Indian tech platform companies and few of the platform companies like travel or advertisement companies. All these companies have seen a reasonable correction in the recent past because all this corrected along with the tech services companies in India, but earnings are pretty strong in this part of the technology space. So those are the areas we are interested within the technology space.
Interesting. Within financials then, Madangopal, where is it that you're finding interest, especially after the big four earnings?
See, financials have an issue here. One is the earnings growth itself is an issue in the financial space, particularly the large cap private banks. And valuations are below the long-term average, but that doesn't really excite the foreign investors to come back to India. Because if you look at the global market, driven by the capex momentum and the energy investments, there is a bit of good earnings growth across various markets right now in the world. Therefore, our large cap, where 30% is banks, where we see the earnings growth in the range of around 10%, difficult to really see the flows coming back. And also from an attractiveness point of view, at 10% growth, we feel it's not a space for us to be. Rather, within the financial space, we like NBFCs. The space went through some correction last year due to credit cost issues and recently due to energy shocks. There were worries about the credit cost might expand. Therefore, valuations are reasonable there, and growth is pretty impressive. Because if you overall see, the credit growth numbers are pretty high right now. So we feel NBFC as within the lending space looks interesting, and within the other areas, capital markets looks interesting because we don't see too much downside for the market from here. And if the oil comes down and stays around $70, we feel that market itself can give you a 10% sort of a return. So along with the 10% flows, so 20% earning growth is possible within the capital market space. So these are the two areas we are interested. We are not particularly too much like keen on the large cap private banks at this point.
Interesting. So where do you see the profit pool getting generated from this earnings season?
See, if you look at, if you're asking about the overall market, right? Not specific to the financials.
Do you think is going to contribute maximum to the profits in this earnings season?
We feel that if you look at after a very long period, we are seeing capex happening across the world, and India is also participating, but we are not participating to the full extent due to lack of AI-related companies in India. But we are participating in the power side of the market, and there is some momentum on the data center-related areas. Already, due to PLI incentives, we are seeing a large amount of momentum in the small scale or mid corporate sort of industries like EMS, renewables, auto ancillaries. All these areas are seeing a good capex momentum at this point of time. So growth will be impressive in this part of the market. So if you look at our portfolio, we have constructed with a view that within the mid and small cap space, we are able to identify companies which are able to grow around 25% sort of earnings. Although the sort of an earnings growth. So there is space where within the overall market where the earnings growth is very impressive, given the momentum in the economic growth rate supported by manufacturing. So we feel that that part of the market will justify the valuation also and continue to see new entrants. So manufacturing plus tech platforms within India and NBFCs as a group, we see that the earnings growth is likely to be much, much superior than the overall broader market. Valuation, you need to be careful, stock specific, but overall we see a good amount of opportunity here. And if you just pick the right stocks and stay invested over the next 2-3 years, you will get a good compounding effect in your portfolio, in our opinion.
Understood. And you spoke about manufacturing as well, but it's very broad a theme, right? What within manufacturing are you liking?
Broadly, we see that wherever the capex is happening right now, we see that three things are helping us at this point. One is India itself doesn't want to import anymore, so you will see EMS and solar and any renewable related projects. There are a lot of capex happening there. That is interesting. And if you look at auto anchors and engineering equipments, we are supporting global capacity requirement at this point, and you can see a lot of companies coming out with QIP and kind of expanding their capacity. Many of the companies in these spaces are doubling their gross block within 3 to 4 year time period. Pharma CDMO is another area where there is an interest. So in addition to power equipments, these are the areas where we see quite a bit of interest. And this is after a very long period that is happening in India that sector by sector is kind of picking up momentum from a growth perspective within the manufacturing. And within that, we have to be careful on valuations. That's something we be very careful about. But earnings growth is going to be pretty good if you take a 3-year view within manufacturing across various sectors. But which sector we are at this point of time? We are mostly in power equipment sector and some companies which are related to AI globally. Other areas we feel valuations are a little stretched, so on any corrections, you should be looking at it. But broadly, now manufacturing has many pillars in India right now. And capital is not an issue right now. So we feel that this growth will continue. We are in an early stage, and this is only gaining momentum as we go forward.
Right. Okay, Madangopal, great to have you today on the show. Thank you so much for your time. Good speaking with you.
Thank you.